Hello everyone. Thank you very much for having you here. Well, today we are here to speak on a very important topic, and that has to do with assets. Asset in a simple definition are those items, those things of value that is owned by our businesses that are used within the operation of our business or businesses or in within the provision of the services we provide, whether we are a service providing institution or entity or whether we are a merchandising entity or a production entity. Now, some of these things involve vehicles, it involve cash, which is money, it involve a lot of things such as inventory, goods we have in stock, and so forth. So now, assets are very important, but there are two categories of assets, and we're going to talk to them. We're going to talk about them in detail a bit. First is the group of assets we consider as current assets. These are assets that they are normally used within a short period of time, and they are used, let's say, within one accounting period. And these kind of assets include cash, they include account receivable, they include inventory, and so forth. So these kind of assets are assets held for a short period of time, but they are also important for the operation of the business, and they can be converted into cash at a very short period of time. And secondly, we have another group of assets, which is fixed asset. Fixed asset are those assets that we use beyond one accounting period or beyond one business period, and their purposes are there to be used in operation to generate income, to generate revenue for the entity. Example could be machine, which is generator, car, and so forth. So for current assets, we do not depreciate them, and for fixed asset, we do depreciate them. Now, depreciation is we try to calculate the value that that particular asset will lose over a certain period of time and be able to save up that amount of money so that when that asset is totally used up, we can be able to replace it without going out to borrow money or borrow or take a loan or whatsoever to be able to replace that asset. So that value is kept within the business. When we depreciate the asset, that value is kept within the business so that at the end of the life of the asset, we can have enough to be able again to replace that asset with a brand new one so that the operation of the business continue. Because remember that the going concern say the business should continue to operate for the unforeseeable period. So depreciation is done based on how we consider how long the asset is going to stay with us and how effectively the asset is going to be used. And the simplest of them is the straight line, meaning that we try to take the assets and we decide that this asset going to spend this length of time with us, and since we're going to use it for this length of time, we divide the value of that asset by that length of time and get to know at each year what value will that asset lost. Take for example, if we have a computer we purchase for our small shop, maybe for smart payment or so. Now we decide that this computer, based on how it is being used, we're gonna use this computer for a period of 5 years. And if the computer is bought for 1,000 and we're still going to use it for 5 years, it means that each year that computer will lose the value of 200. So that is the depreciation value for that asset over each year. So at the end of the 5 year, we have already saved another 1,000 to be able to replace that computer. And that means that we decide that at the end of the 5 year, the asset will have no value. But if we decide that this asset will reach certain value, then we sell it. Let's say we say that when the asset has lost $800 value, the remaining 200, which is the remaining value of it, will be there. Then we sell it. Then that means that we will have to depreciate the asset only for $800. Then after $800, we'll be able to sell the asset off to somebody who wants it or so. So that is what we do with fixed assets. And we are not saying that if you have your private car is not used for the business purpose, you should depreciate it with only business books. No, we are saying only those assets that are used for the operation of the business, that are for the business, that they are, your intention of purchasing them are to serve the business. These are the assets that should be depreciated on the books of the business, so that in the end, at the end of their useful life, you can be able to replace them with a brand new one, because the business needs to operate till the unforeseeable future. So those are what we consider as assets. Remember, cash also is an asset, but cash is a current asset, because we is practically the most basic current asset, because almost everything we do, most often we use cash. So that is what we have to say for asset. In our next video, we'll be discussing on how you can generate revenue to start up a business. Not all the businesses you see around that they started up by the person investing their own money into the business. People have ideas, and sometimes to turn those ideas into reality in a business sense, they have a plan, and then when they have property, personal property, these things stand as collateral or as guarantee. They go to financial institutions and get money for them. But this is a topic that we'll discuss in our next video. For now, we want to say thank you for following us. We ask that you please share our videos, please comment, please like, please react to the video, give your thoughts, so that we can know where to improve and where to do better. Thank you for being with us, and thank you for following us. We want to say thank you to our first 100 subscriber. Thank you very much. You guys, the love has been massive, and we ask that we continue to sail together. Please feel free to reach out to us and ask any question you want to ask concerning what we have presented on, and we'll be glad to give you our thoughts. Thank you very much. See you in the next video.